Hi, mining community. Welcome back to another episode of the Dig Deep the Mining podcast. And today's guest is Anthony Milewski, who's the chairman of Nickel 28, who are an innovative battery metals focused investment vehicle with a focus on metal streaming and royalty agreements, offering our investors exposure to metals integral to key technologies of the electric vehicle and energy storage markets. Anthony's an entrepreneur with a background in finance and law, and is here today to tell us more about Nickel 28 and what they are sort of looking to achieve, plus many other things as well. So that's welcome Anthony to the podcast. How you doing, Anthony?
Hey Rob, thanks for having me, bud. Always appreciate you taking some time to catch up.
Yeah, and likewise as well. So how we always start these podcasts, I just wondered if you can tell the audience a bit about your background. Obviously, I mentioned that you're an entrepreneur and you've been involved in finance and law. So I just wondered if you can take us through your career, say from when you graduated, how your career and journey has evolved to where you are today.
Yeah, I mean, actually, my first real job, I guess, would have been at Skadden Arps as a lawyer, which is kind of funny now. But even from the beginning, the deals and transactions I worked on were in natural resources, and I pretty quickly made my way to a hedge fund in New York. Worked for a portfolio manager, James Passon, who at the time had an enormous book of commodity investments, and worked with him for years before moving on, where I became a managing director at Paula Investments, which is a mining-only investment fund. And then, at some point after 5 or 6 years, I left and wanted to run and found and invest in public companies. And so I went down that path and have sort of been in the space ever since. And really, I think, one of the things I like to do is I try to think about where the market's heading and try to invest in the metals and commodities early on, and then you're able to better position yourself such that when the move comes, you're already long and you can then really participate in the appreciation. And sometimes that means, a passive investment, right? Like copper right now, I put money into a range of copper companies like First Quantum, the big liquid company, and then smaller companies like US Copper, USCN on the TSX, which I don't have any real involvement in other than I think they're drilling in the States, and that's kind of just passive. On the other hand, Nickel 28, I'm the executive chairman, and I'm involved day to day in the running of that company and in the management of that company. And that's a streaming and royalty company with really one primary asset, which is the largest producer of MHP in the world, nickel, out of PNG, and a critical supplier to batteries everywhere. So, I'm involved passively, I'm involved actively. I like to try to take a view early. Carbon is an example of that. I've been investing in the regulated and the voluntary markets. I think that's interesting, and it's coming down the pipe. But yeah, that's my background. Really fascinated by markets and in particular as they pertain to commodities and currencies. So what I spend my day thinking about.
Yeah. Wondering if you can tell us a little bit about, obviously, Nickel 28, and obviously with people that are listening that may not know about, obviously, royalty and streaming, etc. So I just wanted to give us an overview of the company and around, obviously, royalty and streaming.
Yeah, I mean, Nickel 28, it owns part of the Ramu nickel mine, which is the largest MHP producer in the world, which is a mixed hydroxide product. That is important because that is precursor that goes into batteries. So that form of nickel is one of the most desired forms of nickel to go into batteries. The mine's been producing now for I think over 7 years. It's at steady state. In recent quarters, it's been producing over capacity. And so that's really our key asset. And we've had great couple quarters now. It's all public, where we're kind of going to be free cash flow positive this year, which is a unique moment for the company. We're out cash flow and hopefully either do a dividend and a buyback or a buyback. We'll see what happens there. We also have a portfolio of royalties on assets in Australia and Canada. Dumont being one of them. It's been recently in the press that Goldman is running a process for Waterton, the owner of Dumont, to find a partner. That's fantastic for us because, if a partner's found, a Rio Tinto or a BHP to build that, that materially increases the value of it. Turnagain asset in British Columbia, once again, they're out looking for partners, and then a handful of assets in Australia as well. So it's a vehicle that's highly leveraged to the move in nickel and to a lesser extent cobalt. On most of the mines and assets, it's kind of a 10-to-1 ratio, 10 part nickel, 1 part cobalt in terms of the gearing. I would say, if you're not familiar with the streaming and royalty model, a key differentiator is you have exposure to the cash flow, you have exposure to the commodity price fluctuation, but what you don't have is operating exposure. Like, we don't operate any of these assets. And I think, when you're buying a single asset mine, there's a lot of risk there. I think the model in general is interesting because you're diversified across, in all these companies, streaming royalty companies, you're hopefully diversified across a bunch of different assets and different jurisdictions. And that, is a little bit of a different model than just a pure mining company.
Yeah. And what's the difference between a royalty and streaming?
I think there's like a lot of tax nuance there, but I think the easiest difference, like the most basic way to think about it, is the royalty is just a percentage of revenue. It's just a percentage of some other number, right? Like, it's a percentage of royalties pre or post tax, revenue, pre or post tax, just kind of depending on where it sits, because there's different kinds of royalties. So it's literally just 1% of fill in the blank, right? 1% of post-tax revenue, 1% of pre-tax revenue, 1% of sales, right? Just the basic thing. Streams are almost always linked more specifically to the physical. So maybe you've agreed to pay $1 for whatever that physical is. I'm just making up a number. And then we split everything over $1, or, maybe I get the physical. So there's a bunch of variations. And I'm really simplifying here, but I think the best way to think about it is a stream is often linked in some way to the physical commodity, and potentially the delivery of that commodity, and maybe, the price fluctuations of that commodity. Whereas, and oftentimes the stream holder has the right to take the physical, whereas with the royalty, it's usually just a percentage of some other number. And that's very simplified, but I think that's the easiest way to think about it.
Yeah. And obviously,
and I would say, by the way, and I would note that royalties in particular, like in Canada, can withstand bankruptcy. And I don't believe that streams have been tested. I don't believe streams have been tested yet in that way. But that, and the point about the physical is a much kind of easier way to think about it.
Yeah, no, I understand. So what is the carbon market?
Well, the carbon market is something separate and apart from nickel 28. I mean, the carbon market, I've become deeply fascinated in this market. And look, there are two markets for carbon. Basically, there's a regulated market and a voluntary market. And the regulated carbon market, emissions market, the biggest one in the world today is really the European market. It's the oldest, it's the most liquid. But California, Canada, China's developing one. They all have these emission markets that are at different stages of development, and it's really, government directing emitters, polluters to pay a carbon tax, and hopefully deter them, I should say, from continuing to pollute. Or maybe a better way to think about it is it's costing them money to emit this carbon, so hopefully they change their technology or do something so that they don't continue to pay that tax. So that's the regulated market. The voluntary market is something different. The voluntary market is really whenever you go to fly on an airline, or when we used to fly on airlines, or when you buy something on Amazon, there's a little box and it says, oh, for $7.95, you can offset your carbon footprint. Or when Shell or one of these big companies said, we're going to be carbon neutral in 2030, those are voluntary because they're volunteering to offset their carbon footprint. And I think in a lot of ways, that's the much more interesting market, because that market is going to dwarf, I think, the regulated market if all of these companies that have made pledges to go carbon neutral actually do that. They're going to need to buy these voluntary credits. And within voluntary credits, the most interesting thing are nature-based solutions. And a nature-based solution is when you're offsetting your carbon footprint by reforesting a forest, or somehow getting involved in a project that is enhancing the environment. And I think it's a really dynamic and interesting kind of moment for that, because it's only been in the last couple. The carbon markets have been around for over a decade, but it's only been in the last couple of years where that voluntary market has really gotten traction now.
Yeah. And how does the voluntary carbon market actually work?
Yeah, so the way it works is someone has a project, and they have the decision between a number of standards. I prefer Vera, but they're a gold standard. There's a handful of standards, and they go out and they ultimately look at what it's going to take to be listed and in line with these climate goals of the programs, as it were, the registry programs that to figure out how much carbon will be sequestered by the project and all these kinds of things. And so they engage a scientist to do that, and then they figure that out and they come up with a dollar cost. What's it going to cost to implement this project? They seek an investor. Maybe they have an investor. And so that process takes time, but ultimately through that process, they generate a credit that's registered on, in this example, the Vera exchange. And then that credit is then sold to a Delta Airlines or someone who wants to offset their carbon footprint voluntarily. And I think the key is, in the early days of the voluntary carbon market, like it was not the same. Like a metric ton of carbon wasn't a metric ton of carbon, because different people were using different standards and using different science. And I think what you're seeing now is a consolidation around norms that mean when a company goes to offset its carbon footprint, they're doing that in a systematic fashion. And so by consolidating into a kind of a handful of standards, you really have a moment now where the big companies feel comfortable going ahead and offsetting their footprint through I would say these kind of set standards. Whereas in the early days of the market, I think there was discomfort because you didn't really know what you're getting. Was the forest going to be there? Well, now there's protocols in place such that you don't chop down the forest a year after the credits are written and that sort of thing. So it's really evolved. And now with the current push and climate awareness that's growing, I think it's just going to continue to become more interesting.
Yeah. Obviously, I don't know too much about sort of these carbon credits, and I see it here and there and sort of everywhere. Who is actually buying carbon credits? And obviously, we're obviously in the mining resources industry. So I wondered if you can tell us sort of what companies within the mining resources industry are buying credits, and obviously some of other companies maybe outside of the mining industry that most people may be familiar with.
So outside of the mining industry, I almost can't think of a company that's not entering the space now. Okay. I mean, I can't think of any. I mean, ESG, environmental, social governance, that almost dictates that all these companies are going to have to be doing something about offsetting their footprint. Like the Delta, if you just Google almost any company you buy widgets from, whether it's your clothing, you'll probably find that they have some climate goals, and that kind of links back into the ESG principles and that movement in the US, and even ETFs and BlackRock and the major buyers of equity now are saying it's important. So be hard pressed to find someone who's not doing it on that side. Mining, it's also started. Nickel 28, we were the first nickel company that we're aware of to completely offset our carbon footprint by buying credits. But the larger companies are all starting to write sustainability reports and think about what they can do and what it's going to cost them. Save it for coal companies. Like, I don't know how you burn coal. I mean, I don't know how that's going to work, but I would just say that it's started and it's happening even within mining, and it's going to basically make it so that you are unable to move forward as a mining company if you don't do something about it. And in Canada, in the nickel space, whether it's Turnagain, I think Canada Nickel put out an announcement, or Canadian Nickel, I can't think, Mark Selby's company, they're already looking about sequestering carbon and tailings at Turnagain. So it's becoming relevant, and it's going to be increasingly relevant for the mining business as well.
Yeah. So what factors are involved in actually determining the price of a carbon credit?
It's supply and demand. I
Okay.
would say though, in particular for voluntary credits, I would say there's kind of two markets. There's a premium market, and then there's maybe a non-premium. I don't know if that's really the right nomenclature, but there are credits that will trade at a material premium to most credits, and those credits are usually credits which are associated with a project that is kind of annual meeting worthy. And what I mean by that is it can be used as a marketing tool for the companies. And so maybe the implementation of that project costs more. Maybe to save the orangutans in the jungle, just the creation of that credit was more expensive. So notwithstanding that, the whole idea under these different registries is a metric ton is a metric ton. And so you're commoditizing most of the credits, but just within that, there is an element of advertising and wanting to, sort of tell people that you've offset your footprint, and we've done it with this great project with such and such group and such place. But yeah, that's a little bit how that market is trading today.
Yeah. So for me to, and probably the audience to sort of understand it a little bit more, is the more carbon credits you have, does that mean the more sort of more the way the company is contributing to the environment? So it makes the way it works is like better.
Your I don't know, pick at your mining company X, you mine widgets. First you have to kind of have someone in and calculate it, and they need to say, okay, you're going to burn X amount of fuel, X amount of, you kind of go through the whole supply chain, and it's pretty easy and scientific at this point. A guy called Lyle Trenton in Canada has done a great job really in the mining space figuring this out. And they come back with a number, and they'll say, you know what, within a 10% here, and here's what our assumptions were. We think that you're doing 100,000 metric tons of carbon annually. That offsets your footprint and puts you at carbon neutral. And within that scope, because you're going to probably disclose this at some point in a circular or in your annual disclosure, within that scope, you got to say like what it is you're offsetting. Are you offsetting it until it touches the trader, your gate? So that's just a feature or a function of defining what you're talking about. And then they come back with a number, and that number is on an annual basis. You have 170,000 metric ton carbon footprint. They say, okay, and then what you do is you go and you buy those credits. And what's interesting about a registry is taking possession of the credit doesn't offset it. In fact, you extinguish the credit. And so you extinguish the credit on the registry, and you can say, if you want, Nickel 28 extinguishes 100 and X thousand credits in 2021 to offset their carbon footprint. And in that way, anyone, if you've disclosed or put out a press release that you're carbon neutral, well, anyone can then go and see that, yeah, in fact, I can see that in 2021, Nickel 28 extinguished, I think in our case, it was like 50 something thousand credits. We extinguished those credits. And then once it's not the purchase of the credits that makes you carbon neutral, it's actually extinguishing them, because if I just buy credits, you and I can go buy credits and we can turn around and sell them if we want. So it's the actual extinguishing them that makes you carbon neutral once your annual carbon footprint has been determined.
Okay. So why should investors be thinking about the carbon markets?
Well, there's two reasons. One, the price of carbon, it just keeps going up, right? And like there's a greater awareness and a bigger push among governments. So I think it's just another commodity to be long. It's super interesting what's happening. I think that's one reason, is to speculate. And I think a second reason is because it's going to impact all these businesses that you're investing in. It's going to become a feature of the balance sheet, a definitive feature of a balance sheet. And if the company is actually producing, it'll become an even more important feature, because carbon emitted during exploration is like, it's really tiny and not relevant, everything is relevant, but relative to like what a producer is going to have to pay. And so I think it's just important to become aware of another feature of the balance sheet that's developing and going to continue to develop and become more important in coming years.
Okay. Obviously, we've been talking about carbon credits and carbon footprints. Is there anything else that you would like to add that we haven't spoken about? Because I suppose well, for myself, I see it around, but I don't necessarily understand it fully. And I think you've obviously explained quite a lot about credit's footprint. Is there anything else you want to add to I
No,
suppose
I think that's
novice?
yeah, I mean that's the basics. I do think as an investor, you want to be aware for the reason I said. I mean, this is going to get bigger and bigger, and it's going to become more important. And so, as these markets change, it's going to impact your investments, and it's worth starting to think about and how that's going to come into play. People,
Yeah.
I actually think that it's possible that at some future date, people will make investment decisions to not invest around carbon footprint. I mean, I think that's coming. And so it's worth just thinking about it, having on your radar.
Yeah. And as a conclusion, just want to wonder if you can give us an overview or a future outlook for Nickel 28.
Yeah, I mean, look, the key for Nickel 28 at this point is this transition into being a free cash flow company. In a lot of ways, it looked like a development company because it was paying down the debt that we had for the construction debt that we've had on the balance sheet. But I think that in the coming months and through the rest of the year, as the quarterlies come in and investors see the cash flow generation at Ramu, I think and the stock's already gone from 15 cents to $1 or $1.02, whatever it's trading at. And I think that's just because we're here and we're in that moment where that debt is paid down or being paid down.
Okay. And why should investors invest in Nickel 28?
It's leveraged to nickel. There are not a lot of pure plays out there. Share it is problematic because of Cuba, and a lot of the majors have exposure to a ton of different commodities. And so if you want exposure to nickel, producing nickel, because there are obviously other exploration plays out there that have merit. But if you want actual leverage for today, I mean, I think we're probably one of the, if not the only name like that in Canada.
Yeah. And just another last question. Just wondering if you can give us an update of the nickel market at the moment.
Yeah, so I think the nickel market's kind of on hold. We had a great year end, early part of the year, and then Tianqin, who disrupted the nickel pig iron market in the last cycle, came out and said they were going to do the same thing here in conversion nickel pig iron to nickel matte being used in batteries. That technology is not new. The market misunderstood that a little bit. I think the question would be, can they do it in an inexpensive manner? It seems pretty unlikely, but that apprehension has held back the nickel price because obviously they completely disrupted the nickel market over a decade ago. So the market's waiting to see, because the punchline would be, they could just then make nickel matte from all the nickel pig iron in Indonesia, and then the price of nickel would remain low indefinitely. That's the narrative that's holding back the market. I actually don't think that that's the case. Vale has been doing this, or has the technology this for years. People get confused. It's not about the technology. It's about the price. And that conversion is really just the price of energy on the back of huge capex. So what I believe will happen is later in the year, probably around LME week in October, we'll start to understand that, in fact, it's not as cheap as people had feared. And if you're going to have mines built, if you're going to have the Turnigans and Dumonts built, you're probably going to need a couple dollar higher, signaling price from the market to do that, because right now it doesn't feel like the nickel price is high enough to go down a multi-billion-dollar capex journey for a new mine.
Okay. Anthony, really appreciate your time and give us an overview of especially carbon credits, carbon footprint, an overview of obviously nickel and Nickel 28. If our audience wants to reach out to you, if they've got any questions, how can they go about doing that? And are you on any social media platforms?
Yeah, I'm on Anthony Milewski on Twitter. If they DM me, I'm always happy to take a question.
Okay, we'll include all those in the show notes accompanying this podcast. So I really appreciate your time in give us an overview of, like I said, the carbon credits and obviously Nickel 28. Hope our audience has enjoyed this podcast, listen to obviously what Anthony had to say. Appreciate if you can share the episode to friends, family, people in the industry who may have an interest, especially in nickel and around carbon credits. And as Anthony mentioned, it is going to be sort of increasing. You're going to hear about carbon credits, carbon footprint, ever increasing in the industry. So appreciate you can share this episode so people can understand more about, obviously, about carbon credits and footprints. So, and those are listening to the YouTube channel, appreciate if you can like and share below, so more people can have access to this episode and educate the industry more so. So until next time, happy mining.
Thanks for having me, Rob.